Everyone is asking the same question. When will Bitcoin hit $200,000? But here's the problem. Almost nobody is asking what really matters. What happens after 200K? That's the game plan you need to think about. Because the real shift doesn't start when Bitcoin breaks a new all-time high. It starts after. If you'd rather understand Bitcoin than just chase headlines, hit subscribe and join the sharp side. Let's be clear. 200,000 is not some fantasy number pulled out of thin air. We've got ETFs swallowing up liquidity at a pace we've never seen before. Miners selling less, post-halving because their rewards are cut in half. Exchanges with fewer coins available than at any point in the last decade. That's the recipe for supply shock. And it doesn't take a PhD in economics to see what comes next, higher prices. But here's the point. 200K isn't the endgame. It's simply a checkpoint on a much longer journey. The real question is, who moves after Bitcoin hits 200,000? First, nation-states. El Salvador was just the first domino, but pressure is building in countries with fragile currencies: Argentina, Turkey, Nigeria, Venezuela. When one of them adds Bitcoin to their reserves, it won't be about symbolism anymore. It will be about survival. Second, corporates. Remember Tesla? That was just the teaser. Balance sheets are hungry for a hedge, and the bigger Bitcoin grows, the safer it looks for companies to hold. Third, sovereign wealth funds, trillions in assets, and right now even a 1% allocation would shock the market. And finally, banks. The same banks that once called Bitcoin a fraud will be forced to hold it, not because they want to, but because their clients will demand it. So when people ask me, what happens after 200K, my answer is simple. That's when the big money enters the game. Now think bigger. What happens to the global economy when Bitcoin stabilizes above 200,000? Let's break it down. The dollar. The US dollar has been the reserve currency for almost 80 years. Every oil contract, every major trade deal settled in dollars. But the dollar's strength is also its weakness. It can be printed without limit, and history shows what happens when empires abuse their money. Rome, Spain, Britain. They all debased their currency before they lost global dominance. At 200,000 Bitcoin, the dollar won't disappear, but cracks will show. Countries that already feel trapped by US monetary policy will start asking, why not settle a portion in Bitcoin? It's neutral, it's borderless, and it can't be weaponized the same way dollars can. Gold. 5,000 years of history as money. Empires rose and fell with it, but gold has two fatal flaws. It's heavy to move and hard to divide. You can't beam it across the world in seconds, and you can't split a bar into 0.0001 units without losing practicality. Bitcoin solves both. It takes gold's core property scarcity and upgrades it with 21st century technology. That's why I say gold will always have jewelry value, but as money, Bitcoin eats its lunch. The moment central banks start adding Bitcoin to their reserves, gold's role as the safest store of value is gone. Equities. People forget, stock markets are not just about innovation, they're about chasing yield. When returns in equities dry up, money looks elsewhere. And Bitcoin, with its programmatic scarcity, provides exactly what investors crave. Long-term asymmetric upside. Imagine this. A pension fund with $1 trillion under management reallocates just 2% into Bitcoin. That's $20 billion. At today's liquidity, that alone would send shockwaves through the price. Now multiply that by dozens of funds across Europe, Asia, and the Middle East. So when I say 200,000 is not the finish line, this is what I mean. At 200,000 Bitcoin graduates, it moves from being seen as a speculative asset to a strategic reserve asset. The moment the world wakes up to that, every other market has to adjust. So what's my strategy? It's simple, and it hasn't changed in almost a decade. IDCA. Every week, every month, no matter the headlines. When the price dips hard, I add more with my dry powder. When it pumps, I don't chase. I stay calm. Why? Because I've seen this game before. In 2017, Bitcoin ran from 1,000 to 20,000, then crashed 80%. In 2021, it pushed from 10,000 to 69,000, then collapsed again. And every single time, the headlines screamed, Bitcoin is dead. But every single time, Bitcoin came back stronger. That's why I don't base my financial future on anyone's prediction. Not Peter Schiff, not Cathie Wood, not some random influencer on Twitter. I base it on my own conviction, my own research, and my own plan. What does that plan look like? First, education. Books like The Bitcoin Standard or Layered Money changed the way I see the entire financial system, and I'd tell anyone, before you invest a single dollar, invest in knowledge. Second, discipline. DCA isn't sexy, it doesn't get clicks, but it works. When everyone panics, I buy. When everyone screams moon, I stay calm. That's how wealth is built. Boring, consistent, relentless. Third, dry powder. I always keep cash on the side. Why? Because Bitcoin will dip. It always does. And when it does, I don't panic, I execute. First buy, small. If it keeps dipping, buy again. That's how you ride volatility instead of fearing it. I'm not here to trade short-term candles. I'm here to stack for the long game. Whether it's 80,000, 200,000 or 500,000, my approach doesn't change because Bitcoin is not about timing the market. It's about time in the market. And here's the final point. I share my journey openly. If I buy the dip, I'll tell you here, if I add to my stack, you'll know, not because you should copy me, but because I want to show that conviction beats prediction every single time. So I'll throw the question back to you. What's your game plan after 200,000? Drop it in the comments. Let's make this a discussion. 200,000 will come, whether it's this year, next year, or the cycle after, it doesn't matter. The real question is what happens after, because Bitcoin isn't a finish line. It's the starting line of a new financial system. If you want to be prepared for that future, hit like, subscribe, and stay with me.